Here with us now are the co-founders of Market Rebellion, Jon and Pete Najarian. Thank you guys so much for being here, especially on a Friday. I know Connell's off, but we're going to get through this together. So, Jon, I'm going to start with you. How do investors view the president's ultimatum to Apple, you think? You know, their stock is down for the day.
Yeah, well, I think any day that ends in day, the stock will be down if the president threatens 25% tariffs on their biggest product. I mean, I'm sure you feel the same way. I think what the president is really trying to do is not just bring jobs back to the U.S. That's clearly one of his goals. But the other are that it has not been a level playing field. We can talk about Europe in just a bit, but Europe, Canada, even Mexico, many of our good trading partners, as they should be, put substantially more tariff on our goods than we put on their same goods coming into our country. So in the case of something like, I don't know, 85 million iPhones that are brought in from just the cheapest labor that Apple can find, I don't know that shouldn't have some sort of a tariff on it, because otherwise you're never going to be able to equalize some of the trade. We're always going to be the biggest buyer.
Right.
That's my belief. But I think it's not fair the way it's presently set up.
Yeah, equalize is a good way of putting it. I mean, I, for one, am holding off on buying an iPhone because I know that prices are going up and, you know, it can be a little daunting, Pete. You know, tech analyst Dan Ives, who a lot of people pay attention to, says an iPhone would cost $3,500 if it were made in the U.S. Trump says it should be easy to make them here. So who's right? Maybe, you know what, it might be easy if they train everybody, but what's the cost going to be? That's a good question, too, because when you take a look at that, and it's going to be a long time before that happens, right? Or it could be. But who's the winner there?
Yeah, well, I think eventually the U.S. could be the winner, but it's going to take a lot of time and it's going to take a lot of money. And they've talked about the initiative to get out there with $500 billion to try to work on some of this type of thing. So I think it's going to be really interesting to watch and just to figure this whole thing out. I agree with Dan. I think you can go back and forth and you can play it however you want. But I think when it's all said and done, what the president wants to have happen is let's bring the manufacturing back to the United States. And in my opinion, it should be more diversified anyway. I think that if Tim Cook were to look back in time, he probably should have looked at a lot more countries and not just focused on the iPhone being manufactured in China, if that's literally about 90% of the phones are coming from there. I don't think that's a great idea. I think it should be more diversified out and obviously here in the U.S.
Yeah, we've got iPhones coming from Indonesia, I believe, too. And, Jon, there's a new book out that argues that Apple is partly to blame for China's rise on the world economy. The author was just on The Daily Show. So let's take a listen to what he said.
As their GDP eventually overtakes America, and especially because they're doing so good in the advanced electronics sector, more people are going to ask, how did they do it? Like, how did they go from such poverty 50 years ago into the world's greatest maker of, like, military weaponry and advanced electronics? And a big portion of the disquieting answer is year in, year out, Apple taught them.
Okay, so if that's the case, are Trump's tariffs justified here?
Well, I'll throw out that I think they are. I think it's everything from security, which goes to the drugs that we needed during the pandemic, and just things like aspirin. You know, we're not just talking about pharmaceuticals that are behind the counter, but over the counter. Most of that is not made here anymore. Most of it is coming in from overseas. And we saw what happened when the world all of a sudden needed those medications and the supply chain just couldn't supply them. So I think it's security, and I think it is jobs. And when you're looking at something like that iPhone, I know Dan Ives, and I know he's a smart guy, but the profit margin on an iPhone, Laura, is somewhere around 60%, 55, 60%. They don't totally break it out, but that's about what it is. So when you're talking about a tariff, for instance, of 25%, that's 25% on that. If it's a $1,000 iPhone, that means that the actual cost when they're bringing it in is about $400 to $500. You're putting the 25% tariff on that. You're not putting it on what Tim Cook is selling those iPhones for in the Apple stores. So $3,500, if it was made here, I would push back hard on that. Within 18 months, we could be able to be making these iPhones probably at about that same level that President Trump's tariff would put that iPhone at today.
Yeah, I know people listening right now, you think about buying your own iPhone. Most people have iPhones, but then you think about buying them for your kids, too. Your kid who wants a $3,500 iPhone, like, wow, is that going to happen? What about the possible 50% tariff on the EU? I want to talk to you about that as well, because a lot of people are wondering, will that hurt the European consumers more than it hurts us? And you can respond to the iPhone thing as well, but I want to get the EU in there.
Yeah, I think it's important to hit the EU. I'm going to jump right on top of that. I think he's trying to send a message, right? I mean, I think the reality is he wants this to start moving along. He's got the 90 days. We actually bought the 90 days out there, and things aren't happening at the pace in which the president's looking for. So I think this is a way to say, hey, look, let's start working on this and let's get it done. Let's get it done now. Let's get it done soon. We've got to get pushing on this whole thing because those 90 days are ticking along. And I think that's something that I think the president is probably slightly embarrassed about. He wants to get a lot more done, and we haven't been there yet. So they're going to be pushing, I'm sure. Bessent and all the crew are going to be after him. But I think that the reality is he's frustrated, and I think this does send the right message to, hey, let's get to the table and let's get this done. Let's get this negotiated.
And John, on this Friday, go ahead.
Well, I was just going to say, for instance, for your viewers, the average tariff on a European vehicle made in Europe and brought into this country, which doesn't cover the BMWs that are made in South Carolina and the Mercedes that are made in Georgia and so forth. But for an imported vehicle, we hit them with 2.5% tariff. The Europeans hit us on average with 10%. And that's not on a little ticket. That's on a big ticket item, probably $50,000, $70,000, $100,000. That's a big number. And it's enough to skew people's demand to say, wait a minute, I can't afford that. Even though America can afford to sell them here, I can't buy that. I got to buy this Peugeot or whatever instead of this GM Ford. Stellantis, which used to be called Chrysler, any of those kinds of things. Yeah. So I think the fairness here that just has not been fair for a very long time.
And John, I also wanted to ask you about the bond market before we go here, because we've been seeing yields rise as traders sell off U.S. government debt. How concerned is that for the American public as they take a look at it? Is that concerning to you? Should we all be concerned? What do you think?
We should all be concerned, and we should hope that it plateaus out. But I would point out that since 1971, the average mortgage has been just under 8%. Today, we just topped 7% again. So we're a far cry from the average. Was it skewed significantly lower during the pandemic? Of course it was. They were virtually giving money away during that time. And you and anybody else who refinanced at that time were smart. And that was a great move. But right now, this is hurting because obviously a 7% mortgage versus a 3.5% mortgage is a lot more money every month out of your pocket.
Pete, I've got 10 seconds left if you can make a quick last point.
Well, one of the things that I know we were going to try to talk about was to try to hit on what really is going on in some of the different areas of the marketplace. Would you rather be with the bond market, or would you rather be in the stock market? Give me the stock market, the equities all day long, and especially if you can get into the derivative side of things, it's absolutely on fire right now. Some of the movements that we are getting in the markets are just absolutely crushing it.
Interesting. All right, Jon and Pete Najarian, we want to thank you very much. I see you all the time with Connell. I'm pleased that I got a chance to talk to you myself. Appreciate you on this Friday. Have a great Memorial Day weekend.
Thank you.
It's not an option to not have a great Memorial Day.
All right, very good. We'll talk soon. And coming up at